Hi, JJ here with The Art of Value. In a very recent interview, super investor Bill Ackman said this about buying stocks in today's market. I think today is a pretty good time. It's a pretty good point of entry. He said March 2020 was obviously a very, very good point of entry as well. And he said so at the time on TV, just like he's saying so now. He also said in the interview recently, I think it's a sort of another moment. He's talking about another moment apart from 2020. It's a pretty good time to commit more capital to equity markets, although you've got to pick carefully. So he goes on to give a lot more information about that, about why he thinks it's a good time to buy, his strategy in markets, what he's doing now, and his investing strategy in general. So let's take a look at that. His usual strategy, his ongoing strategy, is to own a maximum of about 10 stocks. They own less than that, but also to have some macro hedges, some opportunistic hedges that have been working out very well. They've made billions, and increasingly in this environment, it's worked out really well for them. Firstly, on his own company, Pershing Square, he said he feels quite good about it in 2022. They've made significant profits on macro hedges. They like the companies they own, and they're a little bit ahead of the S&P 500, which hasn't actually been doing well, but he feels good about where it's at the moment. He says the move in interest rates have brought multiples down of companies, which of course has brought the price of the stocks that they own down, the companies that they own. But he said they feel comfortable with that, and they like them even more at the valuations that they are now. On the subject of possible recession and inflation, he says he thinks that inflation is already starting to moderate, at least in the US. He says gas prices are starting to come down, there's some moderation in wage inflation, and supply chain issues are starting to be resolved. He says that he thinks all that leads to the tempering of inflation, and the Fed is also being very aggressive, which will obviously help too, he thinks, in taming inflation. He says about the time of Jay Powell's talk at Jackson Hole, the world woke up to how serious the Fed was about getting inflation down and raising rates, and so the market's pricing in perhaps more aggressive rates than the Fed will actually do. That's what he thinks. He says he thinks the so-called terminal rate will have a 4 in front of it, but he says in Q1 next year he thinks inflation will start moderating. At least he hopes that's the case. How this is relevant to buying stocks right now, it's relevant to the value of companies. He says the long-term inflation rate, he says he doesn't think we're going back to 2%. He said the world's changed and he doesn't see that happening, so it's a different world now, different environment. Two reasons he gives for a higher general inflation environment is one, manufacturing coming back to the US or close to the US, including Mexico, which will generally be more expensive, he thinks, and also ESG, the trend to ESG, which will be more expensive in general. So he says that's why a reason for higher inflation in general. He says companies with pricing power will do well in the new environment, and he thinks he owns some of those companies, and he also likes the royalty-like companies, which they own, and he explains why that's a good thing. He explains some of the companies that they own and why they have good royalties. First is Universal Music. He said that if Spotify raises their prices, which I think is the plan, I'm a Spotify shareholder, then they immediately flows through to Universal Music. So the pricing power, he says music, even in a recession, people listen to music, and even in bad times. Another one is Restaurant Brands. He says that they have royalties on the burgers and fries. So if prices get raised in the fast food chains, then that flows through as well. So it's like a royalty on fast food. The other one he talks about is Hilton. He says that, hotel rooms can raise their prices, and it's kind of the only real estate where it's kind of priced daily. So he says that they are interested in owning businesses with good pricing power, and they'll be inflation protected to a certain extent. And on screen right now, if you're on audio, I've got on screen the companies that they own. Universal Music isn't on that list, but they do own it, and it's Lowe's, the Howard Hughes Corporation, Canadian Pacific Railway, Restaurant Brands, Domino's Pizza, which they have sold over the summer, and they talk about that. It just hasn't shown up yet, but it will. And Chipotle Mexican Grill, and Netflix is on this list, but it's a big zero because they've sold that, and he talks about that later as well. Ackman thinks there's a strong possibility. It's a likely, but it's not set in stone. It might or might not happen. It is absolutely within the realm of possibility that there is a recession in 2023. So he was asked about new stock ideas, what they're doing, what they've been doing in the market, what they're doing, and he mentioned the opportunistic macro ideas mostly. Let me get this right. He said he's made about 2.7 billion profit on interest rate related hedges, which is interesting, but I'm guessing betting that the rates were going to go up, and they did. He also said like in 2020 when they made 2.6 billion on credit default swaps, based around what he thought was going to happen in COVID, and they got that right too. So they've been making some seriously big money on macro bets. So this is where he starts talking about buying stocks now, whether it's good or bad time. He says they haven't identified any opportunities to buy just yet. But he said stocks are getting closer to where they'd like to buy. They obviously have a watch list of things that they've analyzed over the years. I know he does that, and so when they hit the right price, they're buying. So he basically saying that they're getting close to it. You can see opportunities out there, but they actually haven't bought anything just yet. Individual stocks, they've just been making those big macro bets, and they've been paying off. If you're watching on YouTube and you're getting value out of this episode, please consider liking. It would help the channel grow. Thanks. They did sell Domino's Pizza over the summer, but they haven't made any more individual stock moves. They haven't bought or sold, he said, but he did say they're getting closer. It sounds like they're getting closer to it. But he said nothing's got to a great price where they're really excited about it, so they haven't touched anything. They also did sell their Netflix, of course. That was huge news. I'm going to make another video about that. He says that it's obviously easier to make money in a rising market and a bull market, which we had for years. Sort of rising tide lifts all boats, and it's a different environment now. So there's rising rates, but he does think that central banks will eventually get inflation under control. So that'll be a good thing for the market environment. It's the long-term inflation that's important for the stock market, and he thinks so should be moderated. At least he hopes so. It's interesting that even just 24 months ago, 2 years ago, the central banks were worried about deflation, and so it's just kind of flipped. The environment's totally flipped from where it was. So what he says about buying stocks right now, let me get this right. The quote, he says, I think you can do well as a stock investor if you find really high quality companies and you buy them at attractive prices. Also, I think today is a pretty good time. It's a pretty good point of entry. March 2020 was obviously a very good entry point. I think this is sort of another moment. So he goes on to say specifically, I think this is sort of another moment where I don't know how well you're going to do over the next 3 or 6 months, 12. It's this highly uncertain world. But over the next 3, 4, 5, 10 years, it's a pretty good place to be an investor or time to commit some capital to equity markets. So summarizing, he thinks it's a pretty good time for long-term, only long-term investing. If you're just looking for quick trading, he's not into that. In those macro calls, he probably is a bit more short-term, but buying quality companies at good prices. He looks to Buffett. He likes Warren Buffett. He said that before. So basically buying quality companies and prices are coming down. So quality companies at good prices. So you're hearing what Bill Ackman thinks about buying in this environment. He thinks it's not a bad time. What do you think? Do you think it's a good time? Is it going to get cheaper? Are you waiting? Are you buying? Do you have none left to buy because you bought earlier? Let me know in the comments what your situation is and what you think of Bill Ackman's comments. He emphasizes the quality. He says you've got to pick carefully. And in detail, he says you want to own the super high quality, well-capitalized, dominant businesses that you know will be here in 30 years from now. And that's what we own. Companies like Hilton and Universal Music and restaurant brands and so on. So he thinks that they're going to be around for decades. They've got good pricing power and they're going to do well even in an inflation environment and hold for the long term. So, they don't even have 10 stocks. So good quality companies, a few of them, committed to them for the long term. So on screen right now, I've got some of the companies that they own, some of the activity that they've been making over past quarters. Of course, we see Domino's Pizza. This is through Guru Focus. I'm using that so you can see that they have sold it. It showed up as a real-time trade. And Netflix, they've sold out of that. So those are the two that they've got rid of. As I said, I'm going to make another video specifically about, he says when to sell stocks, and he talks in detail about Netflix. So look for that soon. Also, Chipotle Mexican Grill, they've reduced a bit. Hilton, but these are just minor. But they really haven't made any big moves except for selling Domino's and selling Netflix. But he said that they do have cash and they're looking for good opportunities. So it'd be interesting to see their next filing, whether they've bought anything, or sometime this year whether they make another big buy. They've certainly got the cash to do it, having sold Netflix at a bit of a loss, but he explains why, and Domino's as well. He obviously thinks it's a good time to buy, so it will be interesting to see what his next move is. There's more he says about buying stocks in the current environment. This is what he says. That doesn't mean the market's not going lower in the next 3 months, right? But I wouldn't commit all of your capital today. Keep some in reserve, a bit of the dollar cost averaging. The S&P 500 is down approaching 20% for the year. Okay, this was a while ago because it's down more than that right now as I'm recording this. And it wasn't highly overvalued at the beginning of the year. He doesn't think. So I think prices are fair to cheap is what he's saying about the market today. Prices are fair to cheap. And obviously it's gone down like about 5% since he said that, the S&P 500. So obviously he would think that they're cheaper now, I would say. To say that he hasn't been buying anything is not exactly correct, because he does go on to say that their strategy of having 10 stocks with opportunistic hedges. However, they have been doing buybacks on their own company. He says, I'm enjoying buying back 50k shares a day at today's prices. I think it's a good deal. It's the best deal I know in the markets. So obviously he's talking his own book there about his own company, but basically saying that his own shares are cheap and they've been doing buybacks, and that's one of the best deals around. If you like this video, enjoyed this video, got value out of it, please consider subscribing to the YouTube channel, or if you're in your favorite podcast app, please follow or subscribe, and I'll see you next time.